Okay guys, Sunday the 11th of February and we're on Australian dollar, US dollar. So let's have a quick recap of this market from last week in relation to the Sunday analysis, and then we'll have a look at the market for the trading week ahead. So last week we had our key resistance levels up above. This market had broken down below a very sharp upward trend line. We had the very strong move down on the Friday, which turned the market more bearish. For longer term downward movements, we really wanted to see the break below this 780, around about 805, 806, which would then open up the move down toward the 7,700 levels. Now, price action from last week, if we look at it, this is, or it just sort of reminds me why I like being a day trader so much. As day traders, we're able to get in and out of markets relatively quickly. You know, we're basically looking to trade and have the trades closed down by the end of the day. Then at the end of the day, all our money is safe in our trading account. We go to sleep easy. We don't have positions held for days, weeks, and months. What it allows us also to do is, rather than having to determine much longer term trends on markets, you know, looking at the technicals, the fundamentals, where the trend's likely to start, where it's likely to end, you know, all these economic reasons for the markets moving, it allows us to sort of hide in between all of that. And we're able to just sort of get in on one day and be a bit more bullish depending on the price action. The next day we can be a bit more bearish, then we can be a bit more neutral. It allows us to trade very effectively. What it kind of reminds me of, to be honest, is if you've heard the saying, let me get this right. Whilst the optimist and the pessimist were arguing over whether the glass was half full or half empty, the opportunist stepped in and drank the glass of water. Basically, I look at day trading as the opportunist. You know, we're looking to ride much smaller term movements and we're able to switch very quickly. For me, it's great. It's a great way to trade. I hate holding trades for weeks and months unless I have some sort of a guaranteed stop in place. And then really with day trading, you know, you can make just the same risk reward. So it suits my personality a lot more. And I'm presuming if you're watching this video, it also suits your personality. So from last week, exactly what I'm talking about. On the Monday, strong move down, yeah, bearish movement. But what did we do first? Nice bullish rally off of where? Off of our zone. We then tried to break down from this market, don't quite reach the zone down below, pop back up. We then reject off of this zone all the way down into the 825 level. Even as we make the bearish movement here, even as we break the bearish movement here, what are we doing? Spiking up. This one, a little bit smaller, still spiking up off of that zone. So coming into next week now, what are we looking at? First thing is, I'm not really looking at this as a breakdown below these levels yet. These 2 days of price action, it's holding on these levels. So I'm less keen to say it's been a break for that move down to 7,700, especially because if we look at this pullback from where we started back here towards 7,500, put the Fibonacci on it, we're testing at the 50% pullback with the 61.8 just down below. Tends to be very, very key. Doesn't mean this market is moving into a bullish trend, but what it means is, again, being a day trader, we're looking to read what other people are thinking in longer terms, so we can then capitalize in the short term. 50 to 61.8%, very key pullback levels for continuation. So what does it mean? It means that even if we get a very strong bearish movement, still there's very likely going to be buyers looking at this level. We've just had a very, very strong bullish rally. We've then had the pullback. People will be watching at these levels, and not only people watching at these levels for the bullish bounces, but also any short positions looking to close out into profit presses the market higher. Okay, so let's try and get rid of the Fibonacci. Let's get rid of this. Let's get rid of this. These zones here, what I am going to do is move them ever so slightly, taking into account most recent price action. Let's get rid of all of these. First thing is key resistance remains up above 1 and 2. Key support remains down below 1, and really let me have a look. Really, no, they're both very good. I was going to say I prefer this one, but in all honesty, they're both very good levels of potential support to watch. You can actually bring this one down ever so slightly towards 6,595. Just taking into account this spike up from the 30th of November, which if you then move sideways, you can see the market holding at the level. Before, we were holding at the level also, just giving us a little bit of a clue that we potentially want to adjust it slightly. Okay, so let's have a look here. Let's mark in, we'll mark in some of the more minor levels. So we've got 7,960 down toward 7,935 right here. Confirmed it with the spike up on the Monday. Down below, we have another level sitting around about, let's have a look, 7,910 to 7,912. Really, I'd take it all the way down to 7,890. So all we've done is just adjusted it to take into account the recent price action. If the market starts to press back up, resistance and resistance. This is what we're doing. We're basically looking at the key levels for both where the sellers would likely step in, where the profit taking would come on bullish movements, and also where the buyers are looking to step in, because both are good for day traders. Because even a let's have a look, even a single bullish movement like this, when the market is moving down, you know, we've had lots of bullish spikes here, but even a nice strong bullish movement like this, or one of these, as day traders, we're able to capitalize. If we have a key level here, and we would have, because look at this level back here, we can still look to buy into the market, hold the trade for a few hours. If it works out, absolutely great. If it doesn't, that's part of trading. But that's what we're basically looking to do. We're looking to look at the levels for both the buyers and the sellers. Okay, so we have 7,875 down toward 7,864 right here. We're then looking at this spike down and we're saying, okay, what level was this one testing? For me, really, I'm going to say 7,850 down toward 7,830 right here. So we've had the spike down, two spikes up, confirming that as a level of resistance. At present, we are still holding at those levels. Do we still want the one ever so slightly lower? And honestly, I'd rather have this one now because it's giving us a little bit more clues. 1, 2, and 3 tests. We do have the MA200 sitting right here, so it is worthwhile having. I'm going to just say it's a little bit more minor at present. Really, this level right here, 7,813 to 7,805 right here. Down below, we've confirmed the level of support, 7,770 down toward 7,760 right here. So those are the main zones. Now what are we looking at? Key support down below, key resistance up above. Really on this market to turn it more bullish now, really need to see it coming up above this 7,910 level. If we do start to get above this level, also 7,875. So we have resistance and resistance. If we start to break above this level, I'd then be happy to start looking for those bullish bounces up toward 7,890. If we start breaking above this level, I'd then be happy to start looking for the bullish moves up, potentially all the way back to 7,935. Again, we then have a resistance level up there. Down below, we have resistance. We have resistance. If we're looking for potential continued weakness on this market, 1 and 2, we have confirmed a level of support here. If we're breaking down below there now, really, if we continue to reject off of this level, I'm expecting to move down to 7,700. But the confirmation as a day trader would be the breakdown from here. We can then look for little pullbacks, market holding, and then the market selling off down to our key levels. So basically, key levels 1, key levels 2, in between. A little bit more choppy price action. We're waiting for further price action evidence. At present, we can look for them as resistance on the way up. If we start to break up above the key ones, we can start to look for support. If we're starting to break down below the key ones, we can then start to look for the stronger movements down. Okay guys, so that is everything for this week. As always, I hope that was helpful. I hope you all have a good trading week next week. I'm James Orr, and thank you.